This podcast is brought to you by India Knowledge at Wharton. Please visit knowledge.wharton.upenn.edu/India for more information.
Inclusive growth, infrastructure development, and collaboration in science and technology were the major themes discussed at the recent Global Partnership Summit, organized in Washington, D.C. by the U.S.-India Business Council. Business and political leaders from both countries participated in the event, which also marked the U.S. IBC's 33rd anniversary. India Knowledge at Wharton spoke with business leaders at the event about the challenges they face doing business in a rapidly globalizing economy.
Our guest today is Ravilochan Pola, President and CEO of the U.S. operations of Kotak Mahindra. Ravi, thank you so much for joining us today.
Thank you for having me here.
Kotak Mahindra is a household name in India, though outside of India it's not that well known. Could you tell us a little bit about the company as well as about the U.S. operations?
Yeah, Kotak as a group has grown enormously over the last 7 to 8 years in every aspect of financial services business in India. We are fairly India-centric. We are specialists on India and the Indian financial services part of it there. Back in India, we swamped the entire capital market space. We're one of the largest investment banks. We are the largest domestic stockbrokers in the country. We manage about 8 to 9% of the market volumes. Fairly large in asset management business. We manage about $14 billion of assets under management there, both in equities and debt part of it there. We have a life insurance business, which is top 5 in the country, car financing business. Internationally, what we've done is we have been focusing mostly on a couple of areas of businesses there. One is the institutional equity sales, which is a fairly research-driven business there and focused on all investors, large institutional investors who come into India there. In that business, we almost are in the top 5 into India. Give you a volume of business there. The total amount of FII investments have quadrupled over the period of last 3 years' time there into India. And the number of participants have also grown significantly. In the US, we have a desk which does only institutional equity sales there, and we are fairly dominant franchise in that business. In the second part of the business we do is distribution of various type of sectoral and thematic funds into India. They're fully managed funds and also separate accounts for larger investors like institutions and endowments who want to invest into India there. We cater to them, apart from very high net worth, ultra high net worth individuals and family offices. We have some of the who is who families who invest through us into the country there. The third part of the business is we provide platforms for people like hedge funds and large institutions to plug in and to trade into India there. So the three different businesses we have. So you don't have a retail presence like a banking presence there, which you need to have a more branding across the place there. Anyone and everyone who want to invest into India, once they step in, know that Kotak is one of the larger players. So on a more specialized area of India investing and Indian capital markets, Kotak is fairly known in that community there.
The Indian economy has been booming for many years. And from what you just said, it sounds like that boom has been mirrored in Kotak Mahindra's growth. But now the Indian economy seems to be slowing down. What is your strategy with dealing with that new situation?
Yeah, I think the Indian economy, the growth path is not going to be a directional change in the growth path there. It's going to be clearly growing at a very significant rate there. As the minister was talking today about growth coming down to 8.4 levels there. We did a stress test analysis of the entire growth scenario there and found that essentially the Indian growth will come down because of the US recession and other things there and the global flows coming down there to 8.4. On the worst case scenario, we did a stress test where we said that if there's a global recession, if there is a monsoon drought in India, and if there's a global liquidity flow dry out there, what happens to India? So we found that it's going to be from 8.4, it comes down to 6.4%. Now 6.4 plus 8% of the inflation there, on a nominal growth, you're looking at a plus 14% growth there, which is still significant on the world economic scenario there. So essentially that way you're saying it's that though there's some amount of effect on the growth because of the global events there, economy-wise, we're fairly decoupled to the world economy there. Look at exports. The total amount of exports percentage on the GDP is approximately about 16 to 18% there. The exports to US is 20% of that, which basically means that the impact if the US exports growth becomes zero, we found that it will impact the GDP by about 20 basis points, which is still nothing significant in terms of the impact there. But the overall impact on the capital markets is clearly seen, as you see in the corrections that are happening there in the market. The markets were overheated till December, so you're seeing a clear correction happening there. Apart from the sentiment of the liquidity flows coming down significantly from the past. So the fear that you have on the capital market side is that on the capital markets, you're coupled into the world markets there. On the economy-wise, you're decoupled. So the two clear dichotomy there in that part of it there. So the growth of the country will be there. They may not be significant to 9%, but to 8% levels there. On the capital market side, you will see impact of capital flow coming down, which will have an impact overall on the stock markets.
What is your biggest concern about the Indian economy?
I think the biggest concerns are very clearly laid out there. Your current account deficit ballooning thanks to the oil bill and the food crisis that's happening there. The inflation, thanks to these impact of these things there, is looming very large there. You're almost looking at touching at double-digit inflation levels there, which probably is true with many of the emerging markets economies there, where inflation is a concern, including a large economy like US. Inflation is a concern, but for India, it's a much bigger concern. So these two, the impact of current account deficit and the inflation will clearly have a sort of effect on the economy itself. So
it's not just the Indian economy that faces difficulties. The world economy also has its own problems. What is your strategy for dealing with a global slowdown?
I think basically it's the growth still being strong in the domestic market, and there are a lot of interest from international players to come into India. We see a clear slowdown happening, but we don't see a significant negative growth happening there. So that way, the business will be fairly fine. Your 40 to 60% growth of your company's corporates in India will come down probably to a 25 to 30% growth there, which still is significantly okay. So we are very positive on a medium term to long term, though on the short term, we have concerns there.
What is your biggest fear?
Our biggest fear would be liquidity flows into the country drying out because of global liquidity factors there. That will be the biggest impact that India will see there. The capital required for all these corporates to fund their expansion, the money that is required by the government and the corporates for infrastructure financing, we're talking about $450 billion to flow in the next 4.5 years. It's a very tight 4.5 years time for money to flow. And if the global liquidity flows down, if there are fears of funding to happen there, you will see significant impact in medium term to long term also on the growth pattern for the country itself.
To flip the question around, where do you find the biggest opportunities?
The biggest opportunity is once you come out of this, the temporary immediate concerns of the liquidity flows and the inflations and the current account deficit, the biggest opportunity obviously is infrastructure as one big space for the country where so many world players are looking for investment into the country, and that's the biggest opportunity for all Indian corporates, be it in banking, infrastructure services, and the government itself, for an opportunity to attract capital from abroad. That's a fairly large opportunity that we have there.
During the course of your career, what is the biggest leadership challenge you have faced? How did you deal with it, and what did you learn from it?
I think I've been in the US for the last 8 years, and before that, I worked for a long time in India. The biggest challenge that we all face is manpower, skilled manpower, recruitment of these people. So recruiting the right guys and the right people has been the biggest challenge for us. You need to get the right guy for the right job, and the right skills and the right training. Probably that's been the biggest challenge for me.
And then once you've recruited them, retaining them. Right?
Absolutely. Retaining them and showing them luckily for us, for the last 5 years, the growth has been so phenomenal all over the country, in India and abroad for us, doing India business there. Remunerations were not a problem. They quadrupled over the last probably 6-7 years time there. We've seen that benefit of that. So we're not having a problem of remunerating people for when they really deliver. The problem has been training them for a particular task, because specialization has become very, very important now, and to get the right guy for the right job has always been a tough challenge for us, especially in the international part of it, because you need a person when you're recruiting internationally with much more broader knowledge and not just specific product knowledge there, to be able to serve your clients and customers there. And to get that right expertise, and with a dimension which is much more broader than a person who's just doing US-centric work, has been an issue for us. Yeah.
Where do you expect Kotak Mahindra's US business to be in the next 4 or 5 years?
We are expanding now onto the cross-border M&A side in the US. That's been one area which is an initiative we're taking up now. We see a lot of opportunity in that space. A lot of companies in the US who are looking for opportunities in India, be it joint venture, be it getting the space into the corporates, existing corporates in India there, taking a stake, buying out, joint collaborations. So you have various options which US and international companies have to go into India there, and if they want to be a part of the growth that's happening in the country there. Also, Indian corporates are all who have raised money over the last 5 years there, sitting in a fairly good amount of cash on their balance sheet, which is good for acquisitions there. At one estimate, which is again a rough estimate of money there, there's close to about $300 to $350 billion of cash available for acquisitions abroad, which will be unleashed over a period of time there. Leverage it further, if leveraging is available there, you're looking at much more than that of acquisitions to happen there. Many of the corporates have become much more confident and clear in their strategies there, and they're pursuing this kind of global footprint. So you have options that they have of buying into companies which are much more cheaper now than what they were in the past.
Ravilochan, thank you so much for joining us today.
Thank you so much for giving me the opportunity.
For more information, please visit knowledge.wharton.upenn.edu/India.